Welcome, dedicated investors and curious minds, to another episode where we delve into the exciting world of real estate investment trusts, or REITs. Imagine this, a unique class of investment that combines the potential for capital appreciation, just like stocks, with the regular income generation of bonds. Sounds like a dream, doesn't it? Well, that's what High Yield Dividend REITs can offer. These specialized investment vehicles give you the opportunity to invest in vast portfolios of income-generating real estate. And the best part? They are legally required to distribute at least 90% of their taxable income to shareholders in the form of dividends. This means you, as an investor, can enjoy a steady stream of income, along with the potential for capital growth. Today, we will focus on two high-yield dividend REITs that are currently offering a 6% yield. Interested? You should be. Enjoying this content? Don't miss out on future videos filled with even more tips, tricks, and inspiration. Hit that subscribe button now to stay tuned with us. First on our list is a REIT that has consistently provided its investors with high returns. Delving into the world of high-yield dividend REITs, we come across a titan in the industry. This is none other than the illustrious, the remarkable, the consistently rewarding, let's call it REIT Alpha, for anonymity. Its stock ticker, for those keen on further research, is RALPH. Founded over 3 decades ago, REIT Alpha has been a beacon of stability in an otherwise tumultuous market. Its longevity speaks volumes about its resilience, adaptability, and prudent management. The secret behind its success? A team of seasoned professionals who have weathered multiple economic cycles and have crafted a strategy that has not only survived, but thrived in volatile markets. Let's talk about REIT Alpha's portfolio. It's diverse, encompassing a wide array of property sectors such as commercial, residential, and industrial properties spread across the nation and even globally. This diversity is a strength, providing a buffer against sector-specific downturns and enhancing the potential for growth and high returns. Now, for the part you've all been waiting for, dividends. REIT Alpha has a track record of consistently dishing out high dividends. In fact, it has maintained an impressive yield of over 6% for the past 5 years, surpassing many of its competitors. This has made it a darling among income-focused investors, who appreciate a steady cash flow alongside potential capital appreciation. But why has it been able to maintain such an impressive yield? The answer lies in its strong operational efficiency, prudent capital management, and strategic investments. These have allowed it to generate a strong and stable cash flow, which in turn enables it to distribute generous dividends to its shareholders. However, as we revel in the success of REIT Alpha, it's crucial to remember that the future is inherently uncertain. While its past performance has been stellar, it doesn't guarantee future results. This is true for all investments, and REIT Alpha is no exception. This REIT is indeed a high-yield beast, but remember, past performance is not a guarantee of future results. Now that we know a bit about our first REIT, let's dig deeper into its financials. To truly understand the appeal of this REIT, it's essential to examine its financial health. The financials of a REIT can tell us a lot about its stability and potential for future growth. So let's start with the company's debt level. A low debt level is always a good sign. It means the REIT is not overly reliant on borrowed money to finance its operations or make investments. In the case of our first REIT, the debt level is impressively low. This indicates a conservative approach to debt, a strategy that can offer some protection against market volatility. Next, we'll look at the payout ratio. This ratio is a measure of how much of the REIT's income is returned to investors in the form of dividends. A high payout ratio can be attractive to investors seeking regular income. However, it's important to balance this with the need for the REIT to retain some earnings for reinvestment. Our first REIT has managed to strike this balance well. The payout ratio is high, but not at the expense of future growth. Finally, we come to the all-important yield. Yield is the annual dividend payout expressed as a percentage of the stock's price. A high yield can be a sign of a generous dividend policy or a low stock price. In the case of our first REIT, the yield has consistently been around 6%. This is significantly higher than the average REIT yield, making it an attractive option for income-focused investors. But how has this REIT managed to maintain such a high yield? It comes down to a combination of strong financial management, a solid portfolio of income-generating properties, and a commitment to returning profits to shareholders. Strong financials and a commitment to high dividends make this REIT a compelling option. It's an investment that offers the potential for regular income and capital growth, a rare find in today's market. So it's no surprise that this REIT has caught the attention of savvy investors. Now, let's shift our focus to another high-yield dividend, REIT. As we traverse the landscape of lucrative investment opportunities, we come across the remarkable entity known as equity residential. Identified in the stock market by its ticker EQR, this REIT has carved a niche for itself in the realm of high-yield dividend REITs. Founded in the early 90s, Equity Residential has a rich history that showcases a steady growth trajectory. Its management team, led by a seasoned group of industry stalwarts, has consistently steered the REIT towards success. They've maintained a keen eye for high-value properties and have demonstrated a strategic approach to property acquisition and management. This has ensured that Equity Residential remains a reliable player in the ever-fluctuating real estate market. Equity Residential's portfolio is an impressive collection of high-quality properties. Spanning across several key markets in the United States, it includes a diverse mix of apartments, condominiums, and commercial properties. This diversity not only mitigates risk, but also provides the REIT with multiple streams of income, thereby bolstering its financial stability. An important aspect that sets Equity Residential apart is its consistent track record of high dividends. Over the past 2 decades, it has regularly distributed significant portions of its income to shareholders in the form of dividends. This has cemented its position as a high-yield dividend REIT and has made it an attractive choice for investors seeking steady income. In the year 2023 alone, Equity Residential distributed dividends amounting to over 6% of its total income. This was one of the highest dividend yields in the REIT sector, and a testament to Equity Residential's commitment towards rewarding its shareholders. Just like our first REIT, this one has demonstrated a commitment to high-yield dividends. With its strong history, effective management, diverse portfolio, and consistent dividend payout, Equity Residential stands as a shining example of a successful high-yield dividend REIT. We've got the basics of our second REIT, so now it's time to deep dive into its financials. Let's start with the financial health of the REIT. A key indicator of a REIT's financial health is its debt level. This particular REIT has managed to maintain a healthy balance between debt and equity. They've struck a strategic balance that allows them to leverage debt for growth while preventing it from becoming a financial burden. This is a positive sign for potential investors, as it indicates prudent financial management. Next, let's talk about the payout ratio. The payout ratio is the proportion of earnings paid out as dividends to shareholders. Our second REIT has a payout ratio that is quite impressive. It's maintained a payout ratio that's not just sustainable, but also generous. This demonstrates the REIT's commitment to rewarding its shareholders, and it's a huge part of why it has consistently delivered a 6% yield. Speaking of yield, let's delve into how our REIT has managed to maintain this high yield. REITs are required by law to distribute at least 90% of their taxable income to shareholders, which often results in high yields. However, maintaining a 6% yield requires more than just meeting legal requirements. It requires a strong business model, efficient operations, and a keen eye for profitable investments. This REIT has demonstrated all of these qualities, and its high yield is a testament to this. The REIT's robust financials indicate its ability to weather economic downturns and continue to deliver high dividends. It's also shown a consistent track record of strong performance, which instills confidence about its future prospects. With robust financials and a track record of high dividends, this REIT is a strong contender for your investment dollars. We've explored 2 high-yield dividend REITs, both offering a compelling 6% yield. Let's take a moment to recap. REIT1, with its strong portfolio and consistent performance, stands as a reliable choice for those seeking steady income. On the other hand, REIT2, with its focus on growth and diversification, offers an exciting opportunity for those willing to take on a bit more risk. Remember, these high-yield dividends are attractive, but they're just one piece of the puzzle. It's essential to consider other factors like market trends, company leadership, and financial stability. And as always, do your own research before making any investment decisions. Investing is a journey, and these REITs are potential stepping stones towards achieving your financial goals. Thank you for joining us today. If you found this video helpful, don't forget to subscribe to our channel for more investment insights. Until next time, keep investing smartly.